The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on the 22nd day of December. My pleasure to be here Monday through Friday, except not this coming Monday. And a happy New Year to all of you and a Merry Christmas. And let's see if we can have a year, let's try for a year of peace and goodwill. That's what we need. All right, so the Dow is down 46, not a little unusual to say, right? Dow is down 46 at 24,736. Let's just show you this here, minus 350 in the E-mini December. This is one of the things that's fascinating. See, there's a pattern here that I call in the Chapman wave methodology. We got a little one over here, right here, and what I call the Chapman wave. There you go, falling axe formation. Basically, it's a cone on its side. In other words, making lower highs and lower lows. Most importantly, what we're looking for is within the context of higher highs, unless the E-mini, and I'm not talking time because this is one of those patterns that can continue. It can be either very short like that, with just 3 bars and boom, broke out to the upside. If this is a breakout to the upside so we're back on Tuesday, let's just say by Thursday, towards the end of the week, end of the month, end of the year, if there is a push above 2690, well, I guess 2698 was the all-time high. If there's a push above 2698, we can have a flurry of activity. I'm looking at this and I'm saying it's just going to be so hard. I don't see any news that could trigger it. I don't see any technicals other than isolated single 1 or 2 stocks in particular sectors. This is going to be tough. So we might need a little time before we build up support to be able to break to the upside. But at 2684 right now, down 375, with the MACD, daily MACD, the moving average convergence divergence starting to tip down. Hasn't crossed negative yet, but it's on its way to doing that. In other words, the distance between the 9-period differential and the 26-period exponential moving average is getting closer and closer. The stochastic's still good at 85%, but it's starting to make lower. It's starting to turn down. It's way lower than it was at the peak D right there on the 4th of December at 2667.25. On balance volume is, I'm not sure I can use it for clues right now. It's declining, making slightly lower high potential turnaround today, but the day's young. Anything can happen between now and the close. So I'm looking at this and I'm saying, all right, enough with the daily. The daily's going to tell us if there's a break below 2667, in other words, about another 7 points down. That'll be the start of going and starting to trade under the 9-period moving average. But it's this weekly chart, the verticality of the weekly chart where the MACD is still very strong, stochastic very good at 95%, relative strength good. I can't use the on-balance volume because it hasn't got enough data. This is the contract, the December contract. Suppose I could do this. I could go to the ES continuous contract, and then we'll see what the on-balance volume is doing there. That should be at the highs. Yep, there it is. So that's peak A, B, C. We're in leg D, and in the continuous contract, we're in a G/C. Interesting. G/C in the weekly chart. And then this, of course, also gives me the monthly, and the monthly is in an in a D. So all of the, what am I talking about? For those of you who are new to my work, and this is an alphabet lesson. Well, in a sense, it is an alphabet lesson. Let me just show you something here. I hope I've got it on this. If I haven't, I'll have to take it during the break and try to find it. Sometimes I put so many charts on this little library that I use from all my charts. There it is. So there's a very simple technique in the Chapman wave. This is the call came to me as understanding that from an identifiable low, You can merely count each successively higher peak, alphabetize them, uppercase on the way up, lowercase on the way down. And when you get to the fourth highest peak, A, B, C, D, the fourth highest peak, other things can happen. That's where deeper correction can unfold. It's where you could get an Chapman wave instant restart for a whole new buy mode to the upside. It's an incredible thing. Or it just continues to go upside. You can have an alternate count, but you're not going to, you might just stop at an E or an F. So this D is where you get other things happening. So we're in leg D. We're still very good technicals in the monthly chart. The way I'm looking at this and the way we're beginning to trade now in my opening call, since we've had only long positions and I just one or two nibbles to the short side, now we're starting the short side in one of the indices that I think is becoming quite vulnerable. So let's get out of this and let me show you a bunch of things that I want to look at here. INDU. So this is the Dow. Down only 46 points. Not a big deal, but it's going sideways. But while it's going sideways, the stochastic is at 86% good but turning down. The on-balance volume is good but turning down. The MACD is in the daily is good but hasn't yet broken to the downside, which would be the first time since it had this spectacular leap to the upside November the 28th and 29th. Broke above the MACD, the fast-moving average, the green line, zipped over it and stayed positive and still positive to this minute. Okay, and I think that's starting to come down. There could still be one or two pops to the upside. I think most of the work is done. That's really the way I'm looking at it. Now I'm saying you've got certain sectors, the XLE, that's the energy. You've got steel stocks doing fantastic. You've got a couple of sectors. The financials are doing okay considering what the yields have done. They're not doing very well at all. Yes, they're at recovery highs, but they should be soaring and they're not. So let's just go through this very carefully. This is Technical Friday. I've got a bunch of technical questions here, which we will get to. So I'm looking at this and I'm saying, make it real simple. It's not just the Dow 24,900, which I think is going to be extremely strong resistance now. I said that at 22,000, said that at 23,000, 24,000. We just went sailing into this, the weekly chart, as if nothing had happened. Monthly chart didn't even blink. It's had just massive green candles, one little doji candle. What is this? This was August, and the rest has just been beautiful green candles all the way from April. And I think we're ready now, at least for a doji, a small candle in January, or a pullback. However, I'm going to be completely wrong. If there's a trade, one trade in the 25,100s, I have to say, recycled again. I just don't think there's enough energy now. I think the market deserves a rest. It's going to get a rest. So let's just quickly go through this. Dow parameters to watch a close below is at 24,740. A close below 24,480 would suggest that we have got 300 points, which a little less than 300 points down, would suggest that it's going to impact the weekly charts. I'm not interested so much in the daily charts. That's just the clue. It's the weekly charts that haven't given any signals, and that would say the weekly charts are probably going to start having lower highs and lower lows for a little bit, maybe a few weeks, maybe 1 week. I don't know, but that's how it starts. All right. We've got the S&P. We've got a break coming up. We won't go rush through this because the whole long weekend coming up, and then the last week of January is very low volume, bigger time. So we will talk about the S&P down 4 at 26.18. We'll be back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. So the S&P, just give you the parameters real simply. In the next week and a half, if the S&P goes and starts trading under 2663, that's a problem in the daily, but it will start to impact the weekly. Weekly technicals, as I say, are still, like all the others, are still very good. And the monthly charts are really technically terrific right now. It's going to take a lot. It's going to take about an 8% or 10% move down to even have the technicals in the weekly, let alone the monthly, start to deteriorate. That's how extraordinary this rally has been. Let's go to the QQQs. The QQQs right now, I mentioned to my subscriber that made a big deal about this today. Did I? No, I did. I just realized I did all this work, and I got a feeling. Let me just have a look at my my newsletter here. Did I actually remember to talk about the Roman candle? It was one of those things where I did a chunk of work, and then that's fascinating. There we go. It's this one right here. I'm looking at. That is interesting. All right. So, QQQ. Yeah, especially, okay. Completely forgot it. I put it in, made a big yellow circle, typed it and all that. I'll talk about it now because over the weekend I'll send them the chart over again. What I wanted to say was this is a Chapman Wave Roman candle at either, if it occurs at an all-time high or very close to an all-time high. Some of you might remember that monthly candle back in 2007 when we got that top. I think it was going into the January where we had a confirmation. I had a Chapman Wave Roman candle. So this says, if there is a trade within, I put it within a day or two, maybe three, or a bar or two or three, that starts to come down and goes into halfway of the wick. In other words, if it goes into the QQQ, like the 157.20s, there's a really good chance you're going to test the low and maybe even break the low of that candle. So the low of the candle is 156.91, and today's low is 156.95. Wow. So that's kind of what we look at. And one of the things I had said, to go with what we were talking about, looking at the different indices, is that the MACD started to turn down. The stochastic looks good at 83%, but it's starting to weaken. The on-balance volume is very weak. The weekly candle is already red. It's one of the few times you're looking at the different indices, and this is a red candle. It did that a couple of times back 3 or 4 weeks ago, had a very strong candle up last week and going into this high of 158.77. So let me just show you something else that I thought was quite important. We made a peak D in the 120-minute chart, and the technicals were very poor. So I'm going to do this. I've got call coming in here. Okay. So what I want to discuss is within the context of the weekly of the QQQ, the Nasdaq Power Shares Index 100 trading vehicle, there are some signs that I'm looking at. Look, Amazon, we're about to close in 2 days. We're about to close selling for the Christmas season, right? Well, Amazon went to a peak C all-time high. It should make that D. I'm sorry, it went to a peak E all-time high. Let me get that softer. The peak E all-time high back on the 27th of November had a leg C to the upside, which is curving around. This is kind of a classic pattern of what we look at. And in this pattern right here, it's the right shoulder failure that turns into the cup formation or the lowercase h formation. Let me just draw it. It's worth taking a little time now, because this to me is when we did the, was it 2 weeks ago? 2 weeks ago when I did my special Chapman wave all-day session analysis, I spent a little time on this H pattern. And I mentioned also that it must be read in my CD introducing the Chapman wave methodology. Why? Because that, I think, is the pattern that we're going to be looking at over the coming weeks, that there are going to be many failure patterns in some of the best looking charts because they're going to take a breather. That's just my impression. So I'm looking at this and I'm saying, wow, the MACD and stochastic in the 120-minute chart are really very poor. So that gave me the impetus to say, this is the daily chart, it's not just the 120-minute chart, that I must look at Amazon. This is very weak. Google, I'm calling it Google, though it's Alphabet. This is the C stock, made a peak E, potential right arm extension, failure pattern E/B. My thinking here is it's probably going to be a high of at least short to, I'm not sure yet intermediate term, but at least short term resistance, 1078.49 on the 18th. So that's Google. And it's got a leg D in the weekly chart, and the weekly chart is very good, but it's just starting to show some signs of a little bit of internal weakness. And leg E in the monthly, if you go to Facebook, Facebook has just done nothing for a little while now. Comes out with earnings, they're great, goes to a leg F, then a peak F in the weekly chart in the week of the 1st of December, 184.25. It's going to be meandering. It's no big deal. 176. Come on, give me a break. 6 points is nothing. 8 points in this stock. But the weekly chart is hinting that the technicals are very poor. And now let's go to the fourth one, Netflix. Actually, there's so many others, but we'll just go to these as key stocks to watch, the FANG stocks. Look at that. It goes to a peak G in the weekly chart, a peak D already established in Netflix in the monthly chart. And here we've got in the peak G, it was an alternate count, but it had to be a peak G high at 204.38. That was mid-October. Now let's add the other one. One of the key stocks. One of the most mature stocks. Apple. Look at that chart. This is the season of giving, and Apple is giving you some pretty darn good gains. Weekly chart E, monthly chart only a C, just like the QQQs in the monthly chart. But I'm looking at this and I'm saying, wow, it goes to a right arm extension failure mode. That means it went over the previous high of 176.24 established on the 6th of November. It goes to 177.20, just less than $1 higher. 177.20, and that was on 12, I think that was the 18th. I'm going to call it the 18th for now. And since then, it's just been meandering, but it's not making new highs. And you know what? You're going to wait for the results. What results? I couldn't care about the results of the Christmas selling season. We're looking at the next quarter. Can the next quarter be as good as this quarter? Well, they're going to have to come up with some products. So I'm looking at Apple and I'm saying, you know, I think there's limited upside. Oh, big deal. It could go to 178, maybe even 180. That's in the shorter term. Longer term, I think it's going high, but in the shorter term. But if it starts to take at 174.93, if Apple starts to take at 173 to 172 cushion over the next 3 weeks, wow, that says that we could get a rectangle formation. At best, it would be going down to the 166 level. At worst, it could go lower. So I'm looking at this and I'm saying, I think the QQQs have a problem here. And one of the reasons being the SMH, the semiconductor index, as I've been saying for a few days, is acting terribly. It was the leader. Now it's not at 98.73.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. So I'm going to go through something in a moment, but just let me finish this here. So the IWM, the big question with the IWM, and I said I'd wait until Technical Friday to go through it, is that the monthly chart is in leg E. Very clear. There's actually no question at all. It's in leg E. Could it have recycled to E/A? Yeah, sure, but E is what you want to go with. There's no even need to be thinking any other letter. MACD is good, stochastic is good, unbalanced volume has just turned down, a hint of something coming up, but only a hint. The weekly chart I've got is a B. There's no other way that I can count it at this particular point. It's the only one that's odd. And the daily has made a peak C1. I can call that, is not quite enough, but it's close that I can call it a peak C2. It means that there could be a slight pop with a lower high, and then comes down again. That'll be a C3, and that's acting like it was a D. I just wanted to get that out for those of you who do intense Chapman wave work. However, I'm going to do this right from the beginning, because the question here is, and this is going to be very important. Actually, you know what? Let me just do this real quickly. It's already halfway through the session. Let me just run this. Gold, right now, gold is gold is up 7 at 1278. This is really good action in gold, and I can only berate myself for saying, you know what, yes, you had the dollar long, and you didn't want to have a conflict. You've done it once before with being long gold and long the dollar. My gut feeling said that there would be a pullback in gold, because the weekly chart, even now, the weekly chart is still very negative. I mean, I shouldn't say negative. Yes, I should say negative. The relative strength is okay, but the on-balance volume is only at 14%. It's no recognition at all of the rally, and neither is the MACD. So this is one of those slow moves to the upside. This actually is not such great action. If you look at the GDX is trading up 28 cents. Yeah, it looks good. And this one has just added a little bit, and this is the clue for me that the daily chart could act very well, but the weekly chart is very sluggish, and it's done this before, so I didn't do anything in the gold. I'm a little upset that, at least purely on a technical basis, I should have jumped into something. Any stock in the gold, we usually have favorites. ASA is one as an indicator. NG, a small little stock that we often buy, was another one. But we didn't do anything. I thought there was still time. If I do get confirmation about this, there's time to get into them, but we've missed the best percentage gain by getting off the lows. However, the GDX is right now at the 200-period exponential moving average, together with the XLE. I have to say, you know what? With bonds rallying, the Select Energy Spider Fund rallying very strongly, strong leg D in the daily, it's at 72.26, up 44 cents. The XLE. Maybe we are getting that hint, more than a hint of inflation right now. I thought that part of it would come just a little later, late January, early February. Maybe that's already begun. So this in the monthly chart, this is still just another big bounce in the energy sector. But this is good. You've broken key trend line resistance. Now you're heading towards a particular long-term trend line. The next resistance around about the 75 area. Okay, so that's what I want you to put together with the TLT, which is trading up 8 cents, had a huge decline. We saw that in the XLU. This is all leading to the IWM, because you need to look at the composite, the whole thing together. Peak E in the weekly. This is going to be a little troublesome for me, because this is leg F, and there's no way by Friday you're going to get to a new all-time high above 57.23. So this very well could be this is exactly what you expect in a Chapman wave at a peak F when you're making a serious top. That is the XLU, the S&P Select Spider Utility Fund. Whoa, it's telling us a lot of news. So I'm going to put that into the category just to quickly show you, so we can move on here. Here's the triple yield chart. This is the 30-year in white, the TYX. Up 8 cents today. Look at that big move in the weekly chart. Hasn't broken to a new recovery high, but you have got a new recovery high, leg C, in the 10-year, the brown TNX, and the 5-year's gone even higher. Look at this. The 5-year's screaming to the upside. Right now it's at 22.54. That is a big move above all the previous highs of the past year or two. Okay, now I just want quickly to go, not to here, but to here. This is a pullback in wood, the iShares Global Timber and Forestry. They kind of went together, the copper, and then they diverged. But this is going to be a big deal if by January, the third week of January, the wood, WOOD, iShares Global Timber and Forestry ETF, this is the world, it's global, right? So if it starts to take out, and if it takes out the low of the December the 8th week, goes under 68.44. It's at 70.35 right now, down 35 cents. That is going to be a big deal. And the iShares, the Philadelphia housing sector HGX index, housing index, is down 72 cents today. So now I can show you that all the technicals we're looking at, all the key metrics have been met in the when I'm looking at the really important indexes that I like to follow. So now it means that I need to do some work on the IWM based on the Chapman wave methodology, and it can't fake anything. It has to be there. Maybe there's something that was missed. I know exactly what it is because we had that once in crude oil way back when I said everything about this says this is the top in crude oil, and yet my monthly chart was in C until I investigated it and then said, you know what, I completely forgot about that 0.02 difference for a phantom peak C in the 2 monthly charts with almost exact double top highs, and then a breakout to the upside. I'm calling that as a C. Now we've got the D. So finally we had the daily, the weekly, and the monthlies all together. So now let's see what we do in the weekly chart. So what I was going to do is I was going to take a blank chart, a naked chart right here, and just use it as an example. We'll do it fresh since this is Technical Friday. So here we go. The idea in the Chapman wave: find the lowest, most identifiable trough. Then, after the trough is formed, you can start looking at peaks. So right here, we've got a little peak. Right here, you see that? That is 109.95. This is the week of 18th of March of 2016. And 109.94. 1 penny. My eye picked it out. When you get used to, I bet I can say to people in the den, can your eye pick out a 1 cent difference? And most people say, absolutely, after all this time. So this is an A. This one is not. That is 111.22, 111.32. So it keeps going until you make a peak, and there's the next peak. Peak B, peak C, and now you run all the way up. It looks like that could have been one right there, but that, look, this is 124.46 to 53. Here's your next peak. So that goes to a very clear D, and then it goes to an E. Then you get your sharp pullback, so you get your down arrow, and you get your up arrow. Now you start in the most identifiable, lowest low bar. Now you start your count again. Peak A, right there. Those highs of, in the IWM, the Russell 2000, November 25th and December the 2nd of 2016, peak A, peak B. And then what does it do? It goes on to a C and it goes to a D. All right, D pulls back quite sharply, but it's basically holding the moving averages right here. So you could say down arrow, up arrow. So that would be traditional for me to do, although you're already getting to the third buy mode.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. So this is going to be very interesting for those of you who do Chapman Wave methodology. Let me show you something here. Once in a while, I did that, and I'm trying to find, in my mind, I can actually picture it exactly. I know the chart formation, everything about it. And it was in a weekly or a monthly chart, and I decided that I would take the nominal new low that was made as not, it was like a double test of the left side low. And this is exactly the issue here. I had considered that the low of 134.23 on the week of the 19th of May, right here, May 5/19, and that was of 2000, and what are we in? May, June, July, that's last year, 17. That was a low that could have started a new move up. But in the meantime, I have no choice. I want to go alternate count E/A and F/B. So this is the rule in the Chapman wave. It's just the rule that goes through the entire 27 chapters or whatever it is. If after a buy signal, there's a rally and you fail, not you, but the actual chart fails, and it takes out the left side low of even by 1 penny, you're done. You have to start fresh. You can't consider that is a successful test. So here we go, 134.23 on the week of the 19th of May, 134.12 the week of the 18th of May, 134.14 the following week, the 25th. Nice, very subtle rising lows, except you've taken out the left side low. But the more I look at this, the more I say this is one of those very, very rare instances where, yes, you took it out in a weekly chart after months, after about 16 or 17 weeks. So you took it out. But if we go A, B right now, and all the other indices are in Ds and Es, something's wrong. So on a purely technical basis, I have no choice. I have to put a B here. I have to say brand new low, so I've started fresh. That's an A and that's a B. But I want to be right. I'm not interested in being correct in the Chapman wave in terms of, oh my God, you're changing the rules. I'm saying, yes, that's the rule. Here it is. I have a very legitimate reason for saying I want to consider that is an A, that is a B, this is a C/A, and this is getting to the question that you've been asking, Peaky, and some others have been asking for weeks now. What about the IWM? And this is the D that you're always looking for /B. Now, I don't like to say, oh, if you go up, you're going up, and if you're going down, you're going down. I'm saying that the three moving averages, actually four right here, are extremely strong at this time. There is a hint that this little pink one here has started a failure pattern. That's the first one to go, but you haven't had it in the green one, which I believe is the 7 exponential moving average, 7 period. So I'm looking at this and I'm saying, I'm making it real clear. If there is a move to a new high in the weekly chart above 155.41 in the next 2 weeks, 3 weeks, I have to just say, you know what, IWM is one of the stronger ones. It's only in a leg C. It could be an E/C, but however, it's made that new high. So as I'm looking at it, let's go back to the nitty-gritties, because everything I'm looking at says we should be in a failure mode this coming week, the one that Barron says for 78 or 82% or something since the beginning of time. This has been an up week, a very good week. And I'm saying, yeah, that's what Barron says. I'm not sure if that's going to work out. I think we've already had all the news that's fit to print, and that all the good news. And now there's just stuff going on that the market actually could start to worry about. So that's what I'm saying. I hope I explained it. And now you can see when I go here and I put in D/B, there is a reason for that. There's an explanation based on the Chapman wave methodology. There's an explanation to say that fractional 10, 11 cent difference in a couple of months worth of time, once or twice I've had to do this, and this could be one of those times where I've had to say, you know what, I think this is a D. If I was doing it purely on a computer and I had those levels, it could never be a D, it could only be a B. I'm saying, no, I'm a human being. I understand. I created this formation. I understand it really well. I'm saying to you, be careful. The MACD is flattening out, still very good. Stochastics at 83% good, but turning down on balance volumes very good. Let the price be the proxy for what's going on next. And I'm suspecting that the IWM will get to the 152 to 151.70 area quicker than it'll get to the 155s. Wow, that was a lesson right there. So I hope that explanation covers things. I'm going to try, if I can, over the weekend to find the chart in the monthly that said, yeah, you're going to take it. I think it might have even been was it the dollar monthly chart? 70.70, 72.70. No, it wasn't. I'll find it. I made it. Well, no, I don't have it here anymore in the crude oil. Yeah, I'll find it. But I remember I can see it in my head, the picture of the chart formation, but I'm not getting it. Okay, enough with that. I wanted to just show you something really interesting here. Bitcoin, look at that. You remember yesterday I said, be really careful. I've made that. The GPTC has made 35.23 round number high on the 19th of December. And we had that horrible candle on the 21st, on the 20th, 21st. Yesterday was really ugly. And then today we went even lower, trying to bounce, now only down 85 after being down as low as, it's at 1689. It went down to 1155, 1155. Wow. This is volatile. And a leg F in the monthly chart. I'd just say, stay tuned. We're going to see a lot more. I don't want to go through this, but just to show you that the Bitcoin, what I said to someone who emailed me, he's been trading in Bitcoin for quite a while. I said, watch out. Remember I said that there's going to be some kind of a pullback, and then the 15-minute and then the 5-minute charts, and make that left side, right side price time match. And now you're getting yet another arch. Just be real careful. This is the phase that says maybe Bitcoin has to have a restart. So let it play out, and then we'll see what happens. Okay, now let's go. XLF. Here we go. XLF is down today, down 14 cents. Looks so ugly until I squeeze the chart, and look, all of a sudden squeeze the chart. Still in this consolidation. Remember I said there's a good chance if the MACD and stochastic fail that you won't get your Chapman wave stalk leg formation. I was asked about it a little while ago. I don't know if I'm going to have time to do the stalk leg. I'll tell you what day we'll do it, sometime during the very relaxed week of between Christmas and New Year. Next week I'll do something on the stalk leg, other than to say stalk legs that have this kind of formation. This is a propeller shaft, but it's just very brief and more like an oval, like a soccer ball rather than an oval. And that's like a one-to-one to the upside. Doesn't have to be one-to-one exactly, but that's the look it has. So I'll be back in a moment. We've got a lot of emails coming in. I'll try to get to them. Basil Chapman, just as our countdown.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
All right, let's get to some of these. I've got a question here. Let's go to CVX. So XLF is a little bit vulnerable here, but it's still holding pretty darn well. I say vulnerable only if at 27.99 in the next week it takes out 27.50 support. I would like to see it go to another leg to the upside in the 28.30s. It's at 27.99 right now, but I got a feeling it's going to be pulling back as well. CVX is in fact, whoa, I haven't looked at that for a couple of days, huh? Big breakout, A, B, and huge leg C to the upside daily. Leg, is this a D? Leg E in the weekly. Let me just finish that up. Leg D going to an E in the weekly and a huge leg E. Gosh, so much for that dividend not being safe. Boy, that looks fantastic. So 125.39, up 57 cents. Very nice move. What I'm going to say is if you are long, just one of your positions, you might want to put a stop in below the candle of yesterday, not today. Yesterday, way down at the 120 level, just for the next 3-4 days or so, just in case it pulls back. Keep your core position. if you're looking to get in, this is always really tough. This is one that you, A, B, C, yeah, leg D. No, it's a D. I did that incorrectly. This is a D in the daily. So, but is it getting toppy with such? I know what exactly what I wanted to say. Candles like this, followed by a sort of a doji candle, suggests that there could be a pullback, but it'll be a high-level consolidation. Here it is. CVX Axon trading at 125.38 could have a consolidation into the 124 to 123.70s, but it looks to me like it's still going to go higher. So that's that. Next question was JP Morgan. JP Morgan, yeah, all the financials are doing pretty much the same thing. JP Morgan's making this double top with weak technicals. I got a feeling we're going to be pulling back in the indices, and the banks will pull back as well. I'm not saying a major sell-off, because the banks are. I like the banks, so I think the banks are going to have a little bit of a pullback, probably a buying opportunity. Next question was, I don't have time. Hey, everybody, have a wonderful Christmas, and we'll see you back in 3 days. Check out my opening call. I think you'll find it hopefully gratifying, satisfying, and educational. That's the most important thing. I want you to be able to learn to fish for yourself as well. So, Basil Chapman signing off. Have a wonderful week. Stay tuned for Steve Rhodes, and I think Dave's still on vacation, and then Tom O'Brien. Have a great weekend, and a Merry Christmas.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.